I think that gold is one of those incredible assets that this century's outperformed the S&P 500 by over 50%. So having a weighting in it is just wise and prudent, and to be rebalancing each year. So I'm very bullish. It's great to see this recent flurry of new highs came within like a 30-minute price discovery of various commodities, but all-time high. So I think that this is a very positive, constructive sign for alternative assets like gold and silver coin. I think that we're going to see gold's, as you know, deeply understated. It should be at more than $7,000 based on monetary base increases in the past 4 years. So I think we're going to continue to see this sort of chipping away, that gold will continue to make HTH all-time highs.
Gold prices skyrocketed during the North American session ahead of the weekend, with gold and dollar trading above $2,400 and posting gains of more than 1.5% amid higher US Treasury bond yields. The non-yielding metal extended its advancement, threatening to crack the all-time high of $2,431. FrankHolmes, CEO and Chief Investment Officer of US Global Investors, stated, "Gold should be worth more than $7,000 based on monetary base increases over the past 4 years." He predicts that the yellow metal will continue to reach all-time highs as we enter a global election year, with rising government debts and central banks hoarding gold. Gold successfully broke out of a multi-year basing period in March of this year. The subsequent follow-through has been bullish, with solid momentum and only minor retracements or consolidation periods. Holmes also highlighted the rise of the BRICS countries and their push for an alternative to the SWIFT currency settlement system. Despite this, he argued that the dollar remains a strong currency, though gold is perceived as an even safer asset due to its universal acceptance and stability. Record central bank buying, led by China, India, and Turkey, bolstered gold demand in the first quarter of 2024. Notably, China's central bank extended its gold purchases for the 17th consecutive month in March 2024, setting a record for the longest reported streak of monthly purchases. Holmes believes that gold has the potential to outperform the S&P 500 by a significant margin, making it a wise addition to investment portfolios. Recent increases in gold prices, observed within short periods, are seen as positive signs for the asset class, indicating strong market interest and potential for future growth. With gold surpassing $2,400 an ounce, Goldman Sachs forecasts the precious metal's potential to exceed $3,000 by year-end. Join us as we delve into Frank Holmes' insights. To stay updated with our latest uploads, subscribe to our channel and activate notifications. Thank you.
I think that gold is greatly, substantially understated in people's overall portfolios. I think that gold is one of those incredible assets that this century's outperformed the S&P 500 by over 50%. So having a weighting in it is just wise and prudent, and to be rebalancing each year. So I'm very bullish. It's great to see this recent flurry of new highs came within like a 30-minute price discovery of various commodities, but all-time high. So I think that this is a very positive, constructive sign for alternative assets like gold and silver coins. Well, first this century started off with this big push for China coming to the WTO. And in that push was an additional G20 finance ministers and central bankers pushing MMT, modern monetary theory, which basically said that governments can print as much money and then just they can tax it away anytime they want. And this sort of uncontrolled spending and borrowing money is actually much greater outside of America on a relative basis. When you look at debt as a percentage of GDP for China relative to America, you look at Japan, you look at many of the other sort of early emerging markets, gold is no doubt is been understated relative to these other countries, the amount of debt they're putting on. And I think it's sort of now coming to this year in particular because it's an election year. And
Right.
this is a very interesting election year because it is 70% of the world's population. It's unprecedented. It's a huge force that 5 billion people are going to the election polls this year. And these other governments are all printing so much more money. So therefore, you're seeing money roll to for safety, and that safety is gold, and it is then the dollar. So on a relative basis, the dollar is actually also a strong currency go-to, but not as profound as gold. And during this century, we've had something that's really escalated is the BRICS countries. And the BRICS countries, since in the past 4 years, have really made a push against this administration in the US to be able to have another alternative to the SWIFT currency settlement. And so far, it's not really hurt the dollar, it's hurt the euro if you look at overall trade. What people don't realize is that China and Russia are closed economies, that your credit cards do not work there, that it's not fungible. So you really can't have a global currency that's not fungible like the dollar is. So with that, people are starting to move into these alternative assets like gold, like silver. Central banks are recognizing that. And the unprecedented election cycle and all the money printing says, hey, we better own more gold. And in particular, we better own some dollars. Gold is less volatile than the S&P 500. And we've seen that evolve over the past 8 years, each year becoming less and less volatile and more stable. And I think that great investors like Ray Dalio has influenced us, being the largest hedge fund and having what he calls the parity trade. He will have 10% up to 25% in gold as an asset class. This has created a legitimizing sort of concept for many institutions to own gold as a safe harbor. So I think that's another rational reason for it.
Gold prices have advanced despite higher U.S. Treasury yields and a weaker U.S. dollar. The U.S. 10-year Treasury note yield stands at 4.42%, up 4.5 basis points from its opening level. FrankHolmes asserts that gold is undervalued and should be priced higher based on the increase in the monetary base. He expects gold to continue reaching new highs, paralleling terms and strategies from the crypto market like all-time high. While pursuing gold has been a popular strategy among global investors year to date, some believe that from a pure price perspective, there may be more downside than upside in the medium to longer term. Nevertheless, from a portfolio perspective, gold remains a hedge against economic and systemic risks in financial markets, such as a potential further weaponization of the U.S. dollar. Holmes highlights gold investors and general retail consumers' differing behaviors and priorities. Gold investors often focus on preserving wealth and hedging against inflation or geopolitical risks, whereas retail consumers may have different financial priorities. Let's get back to the interview.
I think it's just ongoing. General media still has a negative storytelling regarding gold as an asset class, and not media like yourself. That's why actually more educated, sophisticated people go to you and watch your show. And I know from our space, we did demographic studies, and we found that a high concentration of gold investors actually had graduate degrees, that they understood geopolitics
Exactly.
much
Oh,
more
yes.
than the general retail.
Oh, yes.
The general retail is going to buy Monster drink because that's what they stop at and get their gas, and they buy a Monster drink that can't be caffeinated. So there are two different worlds that I sort of relate to in that global investment theme. But I think that we're going to see gold's, as you know, deeply understated. It should be at more than $7,000 based on monetary base increases in the past 4 years. So I think we're going to continue to see this sort of chipping away, that gold will continue to make HTH all-time highs, as the crypto ecosystem likes to call it. They love these little acronyms like ATH and hold on for dear life, buy the dip, don't be afraid. I'm known for the world of gold. I have my gold equity ETF, which is quant driven on New York Stock Exchange, and it's done spectacular well versus the other gold equity ETFs. I think that when gold has a sustainable run, that you're going to see that the gold royalty companies and gold stocks that have free cash flow will significantly start to outperform, because it's going to be the generalist quant person that they're agnostic towards gold. They're just going to go looking for where there's growth momentum on a per share basis and there's free cash flow. And those stocks have outperformed overall markets. I think that it's ongoing in the battle between what's a centralized asset and decentralized asset. I noticed that that for gold, there was always sort of regulatory media negativity towards gold until the GLD came out in 2003-4 area. And then all of a sudden it developed a more of a legitimized asset base from a regulatory point of view. And I think now that Bitcoin has come out, will be this something similar. But we have to recognize that it is a decentralized asset, and governments are tax hungry because there have been so much money printing. The monetary base outside the G7 countries is even greater. So you are seeing policies coming after crypto. There's also going to be the concern on Amazon going after the space because they want the energy for their data centers. Bitcoin is really an intangible piece of cost of electricity. You need electricity to make an ounce of gold, and you need electricity to make a Bitcoin. And now AI comes along, and they need electricity also. So there's a big rush, a huge infrastructure global build-out for data centers.
Gold prices jumped above $2,400, helped by lower U.S. inflation, even though U.S. Treasury yields went up. The U.S. dollar weakened slightly, with the index falling 0.03% to 104.45. Given the current market dynamics and predictions, will gold continue to be a strong hedge against economic uncertainties? Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.